What if everyone woke up tomorrow and rushed to withdraw all their money from the banks? Would the financial system collapse? Would banks can give their money back? Or would it already be gone? It sounds unreal, extreme, but something very similar has happened before. And if it happened again today, the consequences could be far worse. To understand what would actually happen, we first need to know and understand how banks actually emerged. Banking didn't start as giant corporations. Thousands of years ago, in ancient civilizations in Mesopotamia, people stored grain, gold, and valuables in temples. These temples weren't just ordinary religious centers, they were among the first banks in human history. But why? If you think about the things human beings both trust and fear at the same time, first thing come to your mind would be something religious, holy. That's why they were considered to be first banks. They hid their valuables in temples because of the trust, and they couldn't steal others' valuables because of the fear. And from the beginning, banking has always been built on trust. In medieval Europe, goldsmiths had secure vaults to store precious metals, so people started leaving their gold with them for safekeeping. In return, they received a paper receipt. And something interesting happened. Instead of withdrawing gold every time they needed to pay someone, people started exchanging these receipts because it would be much easier to do it. And as we can all guess, these receipts became a form of money. Then, goldsmiths noticed something game changing. Most people didn't withdraw their gold at the same time, so they began lending some of it out, while still keeping only a fraction in reserve. This was the birth of modern banking. This is what we call fractional reserve banking. It is a system where banks only keep a small percentage of their deposits as cash and lend out the rest to keep the economy moving. It is efficient, but as we'll talk about it soon, the system's biggest vulnerability. Over time, banks became more formal, governments got involved, central banks were created to regulate the system and provide stability. Paper money replaced gold, and gradually, physical money itself lost its importance. Today, most money isn't physical at all, it is digital, just numbers on a screen. And when you check your bank account, you are not seeing stacks of cash sitting somewhere with your name on it. When you deposit money into a bank today, the bank does not just store it, the bank uses it. So technically, your money might be loaned to someone buying a house, invested into businesses, used to fund economic growth, and in return, you get convenience, security, and sometimes interest. But here's the part most people don't think about. If everyone came back at the same time and asked for their money from the bank, would the bank be able to give people's money back? Think about it for 5 seconds. The answer is no. And here's why. First of all, this scenario has a name, a bank run. It starts with fear. Maybe a rumor spread, maybe a bank looks unstable, or maybe people simply panic. Then suddenly everyone rushes to withdraw their money. At first, the bank tries to keep up, but very quickly it runs out of cash. Not because the money is gone, but because it's tied up in loans and investments. And the result? The bank collapses. But it does not stop with one bank. If people see one bank fail, they start questioning others. Panic spreads. Because the most important thing in the banking system, trust, is no longer fulfilled. More people rush to withdraw their money, and this creates a chain reaction. Multiple banks fail, credit freezes, businesses cannot get loans, companies shut down, people lose jobs, and the economy slows, or even worse, crashes. On a global scale, it could trigger a financial crisis. So, has this ever happened before? Yeah, many times. And the consequences were devastating. One of the most famous examples happened during the Great Depression of the Roaring Twenties. It started with the stock market crash in 1929. Panic spread quickly. People lost confidence in banks, and suddenly, thousands of people rushed to withdraw their money. This was one of the largest waves of bank runs in history. But here's the problem, banks did not have enough cash to meet demand, so they failed, one by one. As more banks failed, panic only got worse. Even the healthy banks started collapsing simply because people were afraid. And this created a vicious cycle. Fear to withdrawals, withdrawals to bank failures to more fear, and at the end, more fear to a deep economic depression. Massive unemployment, businesses shutting down, entire families losing their life savings overnight. As a modern example of bank run, the 2008 financial crisis was not a classic bank run in the traditional sense, but it was driven by the same thing: loss of trust. Banks had taken huge risks. When those risks started collapsing, people and institutions began pulling their money out. Some banks failed, others had to be rescued by governments, and the global economy entered a severe recession. And here's the problem gets more interesting. In the past, bank runs required people to physically go to the bank. Long lines, waiting, chaos. But today, it can happen in minutes. In 2023, the collapse of Silicon Valley Bank showed how fast things can spiral. Within hours, depositors tried to withdraw tens of billions of dollars. No lines, no crowds, just phones and clicks. So if you ask me if can it happen again today, it would be tough to answer. But today, banks are more protected. Governments introduced safeguards like deposit insurance, central bank support, and emergency liquidity systems. This is where central banks step in as the lender of last resort. Think of them as the financial world's fire department. When a bank starts to run out of cash during a panic, the central bank can pump money into the system to put out the fire before it spreads. But here's the catch: banking system only works if people trust them. A rumor on social media can trigger panic in minutes, and digital banking makes it even faster. No lines and waiting, just a tap and billions can disappear. So compared to the past experiences, panic can spread faster, withdrawals can be faster, and eventually collapse could be much quicker. But also, government intervention is faster, regulations are more, and global coordination is stronger than before, especially when it comes to systemic stability. Therefore, a total collapse is less likely, but a severe financial shock is still very possible in this situation. So, if a total bank run happened tomorrow, the system simply couldn't hold up. Banking is built on the assumption that we won't all want our money at once. It's a delicate balance between growth and stability. When that balance tips and fear takes over, even the strongest regulations cannot stop the bleeding. In the end, the bank vault is not where the money is kept. Your confidence is the real vault. So the next time you check your bank account, realize that your money isn't always as available as it seems. And I don't know, just be aware of the brutal reality. I think that's something worth keeping in mind. Thank you so much for watching. If you liked the video, please like and subscribe. And if you have any feedback about the video, leave a comment below. See you soon.